Hi there, traders. This is Brad Gilbert with today's trading action. All right, now things are really heating up. Okay, the dollar bounced a little bit overnight, but there's a lot of crazy news in the market, and we're waiting for the numbers to come out. First, let's just focus on what the key number is today. If I just look at trading economics, doesn't take a rocket scientist to work this out. UK inflation number is the key number coming out. Right, there's not much else. We've got FOMC minutes at the end of the North American day. Now, is this a trading opportunity or not? Well, I'd say not really, because if you come over to the interest rate tracker, the Bank of England is 95% factored in to be cutting rates by 25 basis points. The UK economy is really stumbling. Okay, they've just changed their budget, reduced the whole sort of tax impact and a whole bunch of other things, but it's just not going anywhere. What we would have to see is something so outrageously strong that it's not going to happen, right? If you come down to the calendar, what are we looking for? It's this number here in particular. Okay, the consensus is 3.6%, 3.2 to 3.9. That's a pretty big variance for a year-on-year CPI number. Just keep an eye on the monthly number, zero point 0.4, zero point 0.2 to zero point 0.5. So like 95% factored in their cutting rates. Everything looks terrible in the UK. So I'd say even if the numbers bounce to be strong, they're still not going to buy sterling. Excuse me. So let's just have a look at the charts because there's a lot going on here, right? And if I just have a look across the board, just before I go to the charts, the dollar on whole holds gains versus yen with Japan fiscal policy. Who cares, right? Dollar yen is going up. It does its own thing. What the key part is, I tell you, all the banks and reviewers, analysts are all calling for a December cut. Obviously, in sterling, that's 95% factored in. They're calling for an early cut in January as well. It is in all sorts of trouble. So, if we just come to the charts, have a look. Like the price action here is very reflective of no US numbers, right? We are seeing periods where we've got dollar weakness, it bounces back and for no reason. No, like there were some ADP employment numbers out that were terrible, right? So you're getting really, I'd say, sort of obtuse price action that is not reflective of the fundamentals. Sterling, it's just bouncing around at the moment. Now, don't forget, if the numbers come in weak, they're still not probably going to sell sterling, right? We need to see what the dollar's doing. Aussie's sort of discombobulating as well. Kiwi's doing its best to hang on. Oil is falling, so we are starting to see the Canadian impact, right? Lower price. Then you've got the beast, which is going up, and dollar Swiss, right? None of this makes a lot of sense, right? You look at the overall trail here, right? There's been no real change in the treasury yields. There's no reason for the dollar to be going up. We've seen the equity markets getting hammered, right? We've seen the cryptos like Bitcoin, it's getting hammered. A lot of the safe havens, and I was just going through this, right? Just having a look at the safe havens in general, right? The dollar index, okay, a measure against a basket of instruments, with euro being largely the main one, slowly hedging up. Dollar Swiss has come down a long way in the last 12 months. Dollar yen has gone up a long way, right? You look at gold, right? It's had a hell of a run and now sort of at crucial levels, as is silver. And then you've got the sort of collapse in Bitcoin, right? A lot of the safe havens are sort of being cashed in a bit because a lot of the market doesn't know or doesn't really have a feel what's going to happen when the US numbers come out. I've got a feeling the US number is going to be terrible and we're going to see a nosedive in the dollar, right? So when you're looking at the markets here, like you want to be looking at the daily charts because that's going to give you a bit more of a overall view of what's going on. Here you can start to see it's largely a lot more sideways, right? Sterling obviously with a downward bias with their whole very similar to the UK economy situation. So those two make good sense, right? Down, down, but that's factored in. What we are seeing, dollar CAD, it's holding its ground. Dollar yen up. Dollar Swiss is the sort of drifting sideways, not really giving us much of a safe haven, much of a dollar move or a Swiss move. So, like I've got to say to you, this is really tricky, right? And as we come into the various news, when the news services are short on information, like economic information, which they are with US numbers, it comes back to like just things on the peripheral, right? The Epstein files. That's got a huge amount of following at the moment, and the news services will follow that. The Saudi prince was in New York, getting grilled. Trump slammed the ABC reporter for asking them about, the journo being killed a number of years ago. So like the news isn't exactly helpful. You come to the central bank news, and this is where you can start to read up on, say, the Bank of England, cut interest rates, December, quarter one. The US employment numbers, right? The private numbers that have been coming out have been terrible. Are we seeing that reflected in the markets? Not yet, right? So we could see like a tsunami of crazy price action starting Thursday, right? So, and this is the thing, right? There's a bit of a divide in the government, US government, about what's going on. There's a divide on the Federal Reserve Board about what policy should be. How the hell are these guys supposed to make a decision if they don't know what the numbers are, right? Most of them are a bit stupid, but that's by the by. So if you're looking at the majors, it's very hard to work out where the best price action is, right? And I've just been flicking around looking at various things like dollar CAD, right? On the hourlies, it's correlating extremely high with oil at the moment. So as we come into the sterling UK or the UK CPI numbers, you want to be looking at sterling against all the crosses. Have a fair view of what's going on. Now, a lot of these have been getting beaten up. The one that isn't is sterling yen. It just keeps climbing, right? It's all the yen crosses are sort of behaving like they're going to the moon, right? Excuse me. So sterling Aussie largely sideways, sterling Kiwi largely sideways, euro sterling largely sideways. Don't forget, the interest rate cut in December is already factored in. So is there more weakness to come? I don't know. Sterling Swiss is slowly picking itself up off the floor, but it's going down. Sterling's going down against everything, right? But that's factored in. When it's factored in, and this is where the interest rate tracker comes into play, and I'll be covering this later on, when this is all factored in and the market's all one way, well, that's when it can get tricky and you might see sterling sort of go up, right? So just have a look today. I mean, this is a bit of an overview of what's going on. I will be covering understanding and utilizing the interest rate tracker today, give you a bit of an understanding of what it really is. So we can sort of work out whether a release like the CPI numbers is actually a major event or not, right? Keep an eye on the trade signals. There's a lot of crosses here where there's a lot of good things happening, right? So Euro outperforming Aussie and Kiwi, the CAD and the yen. So I tell you what, Euro crosses look pretty good. They aren't right in the zone at the moment, but they will be at some stage. So that's it. It's a matter of this week, right? The whole global market. I've spoken to a couple of mates who are still in the banks. Everyone's sitting on their hands waiting for the US numbers. There's no need to put yourself under pressure as we go into this, right? If you came down and read the weekly market insight, this is where you start to sort of give an overview of where the market was and where it is now, right? It can help you sort of work out, should I be looking at the CPI numbers? Because I've had a lot of traders sort of say to me, hey, Brad, we've got the UK CPI numbers. Are we trading the event? Is it like, are we on, And I'm like, no, this is not like a tradable event. It's already done. It's already in the market, right? So when you come back through and you're looking for the numbers, make sure you're trading for the right reasons. Don't go in looking for a quick fix at the moment, right? This is the price action on sterling over the last, week or so. And it has just been trading in a wild price action range. I don't see too much happening with the UK CPI numbers today. You know what? If the numbers are, one thing will be, if the numbers are exceptionally weak, right, then what we might see is, them starting to factor in 50 basis point cuts like New Zealand did, right? CPI month on month, year on year. Forget about the core numbers. They sort of are there, and retail price index. It's the CPI numbers year on year, which is the main number. Let's just see how it drops, see what the impact is. At the moment, I think it's all a little bit disjointed and we need clarity. There's a lot of cloud over the market. And if you do go through the news, there's a lot of crap, right? There's a lot of crap going around from the central banks to especially the front page stuff, right? All right. Anyway, that's my $2 worth. It's interesting markets. Relax. We're going to have all the US numbers come out. We'll know exactly where the Fed are. I'm expecting cuts. And we see all the other currencies shoot to the top side. That's where the cash is. Not in the market just at the moment. All right, guys. Have a good one. All the best. Cheerio.